Hey everyone, welcome back to the Spotlight stage at Sibos. My name's Oisin Lunny. I'm your host here at the Spotlight stage for the next 4 days, where we're going to be looking at open banking, customer experience, cybersecurity, and banking for a better world. You can find me on LinkedIn and all the usual social networks. It's great to meet you. I hope you're enjoying yourselves. We found out this morning some great news. We've actually had over 11,000 delegates registered for Sibos this year. That's incredible. Over 11,000 people are going to be here over the next 4 days. So congratulations to all of you for picking this place to be for our next fantastic speaker. I would like to give a little shout out to our amazing curator for our Open Banking Day. That's Charlotte Leach from Swift. So thank you so much, Charlotte. Can we give Charlotte a big round of applause, please, for bringing together all of these amazing rock star speakers in the world of open banking. And our next speaker is no exception. So we're going to have a deep dive now into the idea of open banking beyond regulation. And it's really going to be looking to establish the relevance of banks in the digital economy. So a very big, important topic and the perfect person to speak about it. Ladies and gentlemen, please give your warmest, loudest, biggest Spotlight stage welcome to the Managing Director of Emerging Payments at Citi, Tony McLaughlin. Thank you, Tony.
Hi everyone, I'm Tony McLaughlin. I'm not sure I live up to the rock star billing. I apologize for that. But I have been working in the payment space for 26 years. And what I'd like to do today is share with you a frame of reference for open banking that goes way beyond treating open banking like a regulation or a compliance project. Because the fact is that many financial institutions look at open banking as nothing more than a layer for disintermediation. And my talk today is to give an alternative frame of reference. And actually, what I would like to suggest to you is that open banking is a test case as to whether our industry will move into the 21st century or whether we will leave a vacuum that will be filled by big techs and fintechs. So what I'm interested in talking about today is a bank-friendly future. And I believe that far from being a headache, far from being something that you should put your compliance people on, far from something that's a tick box exercise, you should embrace open banking. Because open banking is one element of moving your financial institution and moving the banking industry into the 21st century. Because let's acknowledge the gap between the expectations of digital business in the 21st century and the reality of banking. Our back offices are built on batch processing and store and forward messaging. We are anything but real time and anything but interactive. And because of that gap between where we are as banks and where the digital economy expectation is, many fintechs and others are seeking to bridge that gap and overlay on top of a kind of clockwork 20th century banking infrastructure. We live in a world of platforms. McKinsey produced a report that said some $60 trillion worth of economic activity would resolve into platforms by 2025. Marc Andreessen said that software is eating the world. If that's the case, then platforms have the biggest appetite. The world of platforms is only just kicking off, and it will have a dramatic impact on banking, just as it is having a dramatic impact on high street retailing. And today, you may have seen that a travel company which has been around for 174 years, Thomas Cook, has gone bust. You know, a business which is venerable, a business which serves millions of customers, has not adapted to the world of platforms. So here's something we know for sure. financial services will be embedded into digital platforms. That is for sure. You need only look at the example of Alipay and Financial and how it intermediates the needs of consumers and businesses on the Alibaba ecosystem to see that financial services will be embedded into platforms. But the question is, who will provide those financial services? Will those financial services be provided by the banks, or by fintechs, or by the big techs themselves? This is the race that we are in as banks. Will we provide the financial layer of the digital economy, or will we fail to even show up? Because the fact is that the only way that financial services are going to be embedded into platforms is through API. The only way. So if your institution, if our institutions are not delivering the financial services required by digital platforms, these platforms that will agglomerate $60 trillion worth of business, consumer to business and business to business, then your bank hasn't even shown up. In the 20th century and before, your branch on the high street was a very tangible expression of your presence. You cannot take it for a given that your bank will be present on the information superhighway as it is in the high street. And what it means to be digital in a world of platforms, it's not about having a branch that looks like an Apple store. It's not about having a fancy app. It's not about having a proof of concept for blockchain. It's about whether your bank can service the financial needs of consumers and businesses in platforms. And to give you a frame of this, what I'd like to say is, number one, if you haven't read this book called Platform Revolution, certainly take a look at that. But every platform has got three components. There's a demand side, a supply side, and the platform in the middle. And you will find financial preferences and financial needs on the demand side, the supply side, and the platform in the middle. But I promise you, your bank is not supplying those financial needs at the moment. And that is why the alternatives are being created. Read the report from BIS, Big Tech and the Changing Nature of Financial Intermediation, where big techs are stepping in to provide financing on platforms because they can't get those financing from the banks. And as it turns out, the network scale of the big techs and their informational advantages means that there's early indications that big techs do lending better than banks because they can have a more fine-grained understanding of the creditworthiness rather than the credit bureaus that we go against or our internal credit models. This is a world of platforms. It's a dangerous world if you don't show up. If you are going to show up, you must show up with APIs. It's publishing your APIs is the equivalent of building your branches on the high streets in earlier eras. You need to show up. But how do we show up? We need to show up with API standards. In the big tech companies, engineering resource is at a premium. Engineering resource is the scarcest resource. They do not want to build against 10,000 proprietary APIs. They want to build against standard APIs. So we must come together and create the API standards that are required by the platforms. This is not about waiting for regulators to hit us over the head with a stick and make us open up payment services and account information through a regulatory mandate. This needs to be something that we voluntarily run towards. So in Hollywood, they say, show, don't tell. And we've come together with, under the auspices of SWIFT, with a bunch of fintechs, banks, big techs, and merchants, and we published 2 API standards to show banks how to make money from open banking. The first standard that we published was what's known as the SWIFT Pay Later API standard. What is the SWIFT Pay Later API standard? It's a way for any bank to offer the same kind of point-of-sale lending as Klarna or Affirm or Afterpay, installment lending at the point of sale. So we created a global standard where any bank can deliver in a consistent way the same type of installment lending at the point of sale as is offered by these fintech lenders. And we must, if we're going to defend anything, we must defend lending. Lending is the heart of banking. Banks are balance sheets. So let's look at the developments in lending where we are being disintermediated. Ant Financial has loaned over $100 billion to consumers in the last year. WeChat Pay have loaned over $160 billion to consumers and businesses. PayPal Credit over $100 billion. And look at the market caps of Affirm and Afterpay and Klarna and all of these alternative lenders. The point at which the consumer is looking to access credit is moving on to platforms. And so the question is for your bank, can I lend through API? In fact, your digital transformation programs, again, they might be looking at the wrong thing because your bank has not transformed in the digital world unless you can do lending through API. The second standard that we've produced is called the pre-authorization API. In the regulatory minimums for open banking, there's 2 services. One is account information and one is payment initiation. The payment initiation API does not solve for most use cases, for many use cases. One simple use case is when you go into a hotel, they don't know the final bill. They need to do a pre-authorization up front. Who knows how much of the minibar you're going to drink by the end of your stay? So the pre-authorization API that we've developed, again with SWIFT and banks and fintechs, is filling in the gaps which are not fulfilled by the regulatory minimum. And we would invite all banks to participate in this effort. API standards should not be at the national level. API standards should be at the global level. SWIFT is 10,000 plus banks, guardians of the ISO 20022 standard. So we want to see the banking community coming together at SWIFT to build standards for retail banking and wholesale banking so that we show up. If we don't show up, if we don't deliver core retail and wholesale banking services into digital platforms through standard APIs, then substitutes will be developed by fintechs and by the big techs themselves. And open banking in and of itself is not enough. Because open banking, if there's one lesson from PSD2, if you're familiar with PSD2, there's been a big debate around strong customer authentication because the strong customer authentication journey in PSD2 is crap. You know, redirecting into your own bank and going through your bank's proprietary authentication mechanisms. Here's the truth. The places where you see the greatest stimulation of electronic payments, the places where you see the most progress in electronic payments are the places which have got good digital ID. India with Aadhaar. Aadhaar is foundation in Hindi. For good reason. It is the foundation of good payments. Sweden and Norway, Denmark, Belgium with federated ID schemes. Good digital ID is the foundation of a good digital economy. And I plead with you, I urge you, if banks give up ID, If banks continue to try to control ID as a proprietary thing with their own authentication mechanisms, then big tech will take over ID. And if you don't think that's a threat, read a book by David Birch called Identity is the New Money. And his argument, which is a strong argument, is this: payments equals identity plus accounting entries. And by the way, it's not the accounting entries which are the hard part. We can solve payments. We can solve payments by taking the best practice from other countries, bank ID in Sweden. Let's have a pan-European bank ID. And even that is not enough. Sorry, let me just move on. What we need to do as bankers is bring the whole of the fiat currency system into the 21st century. It needs to be 24/7, real-time, interactive, and not leave any oxygen or any scope for crazy alternatives like private global currencies competing with national currencies owned by big tech companies, or the encroachment of central banks with central bank digital currencies into retail banking. These alternatives only get oxygen, only have room to flourish if we leave a vacuum. So what we need to do is this. In India, they talk of the India stack of capabilities: Aadhaar, RuPay, IMPS, UPI, this whole stack of capabilities which is rapidly creating a bank-friendly and enormously progressive digital payments ecosystem and digital economy. So we need to look at the fiat currency stack. What is the fiat currency stack? It's the RTGS system. RTGS needs to be 24/7. It's SWIFT. SWIFT needs to migrate away from being a store and forward messaging system to be an interactive messaging hub based upon, based upon JSON APIs. Forget about just moving to ISO XML messages. Let's move into an interactive API. Every country needs the equivalent of the India UPI scheme, which is a request to pay scheme. We need to build digital ID, and so on and so forth. We need to fix our system, which is the fiat currency system. If we don't fix the fiat currency system, then radical alternatives will be given room and will be given oxygen. So what is a bank-friendly future? A bank-friendly future has three components. The bank account needs to remain the primary store of value. The bank balance sheet needs to remain the primary store or source of lending. And the bank needs to be the guardian of digital ID. And these things might sound like motherhood and apple pie and givens. Believe me, they are not givens. And it's also not a given that our community will service the needs of platforms effectively. So I leave you with this plea, really, a call. Let's work together on all of the elements of the fiat currency stack. Let's have an agenda of real stuff, not innovation theater, not proof of concepts on the latest technology, not endless discussions about how we apply tools, how do you apply machine intelligence, how do you apply big data, how do you apply blockchain. No, that's the wrong way around. The real discussion is this: how do we revitalize the banking system, individual banks, and the market infrastructure to bring payments into the 21st century?